Hello students, let's look into this question under dissolution of partnership firm. In this particular problem, we are going to see how partner is going to pay the realization expenses. So far, whatever the problems that we have worked out, the realization expenses is being borne by the firm. It is paid by the firm. Now, in this particular question, we are going to see on how partners are going to get remunerated and the dissolution expenses is being paid. Harish and Suresh are partners sharing profits and losses equally. They agreed to dissolve the partnership on 31st March 2018. The balance sheet was as follows. On the above date, the firm was dissolved. The following information is available. Stock rupees 25,000, debtors 20,000, bills receivable 4,000 and machinery rupees 33,000. Point number 2. Creditors are taken over by Harish at book value. Bills payable were paid by the firm at 5% discount. Suresh paid the realization expenses of rupees 1,000 and he was to get a remuneration of rupees 2,000 for completing dissolution process. Prepare realization account, partners capital account and bank account. So from the question we clearly understand that the firm is being dissolved by the partners as on 31st March 2018. Their profit sharing ratio is equal. As we follow the balance sheet, we understand that creditors' bills payable will reflect in realization account. In case of Suresh loan will reflect in bank account, whereas reserve fund and capital will reflect in partners capital account. In case of assets, we have cash at bank which will reflect in the bank account balance, whereas the rest of the assets will be taken in book value in realization account. Now coming to point number 1, the assets are realized like this: stock, debtors, bills receivable and machinery. In that case, about building, no information is being given in the question. So therefore, we will realize the building rupees 23,000 in its full value. Point number 2. Creditors are taken over by Harish at book value. The value of creditors is rupees 25,000. Harish is going to take over the liability at book value. So what is the book value of creditors? It is 25,000. Bills payable were paid by the firm at 5% discount. Bills payable amount is rupees 10,000. On this 10,000, we need to reduce 5% discount. The last point is Suresh paid realization expenses. Here, the partner is paying the realization expenses of rupees 1,000 and he was to get remunerated of rupees 2,000 for completing the dissolution process. Now, from the question we need to understand, students, that Suresh is going to complete the dissolution process and realization expense of rupees 2,000 is to be considered as realization expenses and to be shown in partners capital account and in realization account. In case of expenses of rupees 1,000, you need to ignore this information as it is not considered in the firm's book. Preparing realization account, we need to follow the balance sheet. So hence, on the board you can see I have taken the assets and liabilities in their book value. First I have written the liabilities, creditors and bills payable. Then I have started writing all the assets on the debit side in their book value. The question mentions about provision for bad debts. This is straight away clear. Let's follow the adjustment. The first adjustment is with respect to the assets which are being realized, which will be taken in bank account. So write it as by bank account, assets realized. The first asset is stock. Amount is rupees 25,000. Debtors is 20,000. Bills receivable 4,000. Machinery 33,000. They have not mentioned anything about buildings, so therefore we will realize buildings in its full book value, which is rupees 23,000. So that's it with assets which are being realized. The total is going to be 1,05,000. Coming to the second part of the adjustment, creditors are taken over by Harish at book value, and the third one is bills payable were paid at 5% discount. So first we will make the payment of liability to bank account, liabilities paid, bills payable, amount is rupees 10,000 less 5% discount, amount is 9,500. Now we will mention about Harish taking over the liability. So write it as to Harish capital account, creditors taken over. He's taking over in full book value. So amount is rupees 25,000. The last adjustment is with respect to dissolution expenses, which is paid by Suresh, and for this the firm is remunerating. The firm is paying Suresh for the dissolution expenses. So therefore we will write it on the debit side as to Suresh capital account. This is with respect to realization expenses for which he is getting remunerated, and the amount is rupees 2,000. You need to ignore the amount of rupees 1,000 in the firm's book. That's it with realization account, students. Now you need to do the balancing. On the debit side, you will get a total of 1,45,500. On the credit side, you're going to get 1,43,000. So let's write the highest amount, which has 1,45,500. The difference amount, we are going to get it as rupees 2,500. So this 2,500 is the loss shared among the partners in the profit sharing ratio. So the first partner is Harish. They are equal partners. Second partner is Suresh. So 1 by 2 into 2,500, amount is going to be 1,250 for both the partners. Now please remember, students, we have bank account, mentioned information on the credit side. Then we have partners capital account, so we need to mention this amount in partners capital account on the credit side. We have bank account asset realized, so show 1,05,000 on the debit side of bank account. We have partners capital account information, show this in partners capital account on the debit side. Partners capital account, over here first and foremost you need to bring down the capital of the partner. So write it as by balance bottom 40,000, 30,000. In the balance sheet they have mentioned about reserve fund. Amount is rupees 5,000. Distribute this in their profit sharing ratio, which is equal. The amount is going to be 2,500 each. Now, in the realization account, we have partners capital account being mentioned. Over there, Harish is taking over the liability. So therefore, let us mention that in partners capital account as by realization account, liability taken over. That is, he is taking over the creditors at an amount of rupees 25,000. In realization account, we have seen that Suresh is realizing the dissolution expenses. So therefore, mention that as by realization account, realization expenses being paid by Suresh, amount is rupees 2,000. In realization account, we have got loss. So that also we need to record in partners capital account. Write it as to realization account. We have incurred a loss already being calculated as 1,250 for both the partners. Let's now do the balancing. For Harish on debit side, it's 1,250. On the credit side, it's going to be 67,500. So let's write it as 67,500 on both the sides minus 1,250. It is 66,250. The final amount paid through bank account. On the debit side, amount is 1,250. On the credit side, amount is going to be 34,500. So let's write it as 34,500 on both the sides minus 1,250. The final amount being paid is 33,250. So that's it with partners capital account. Please make sure that you mention this information in the bank account on the credit. Preparing bank account, first and foremost, we need to bring down the opening balance mentioned in the balance sheet to be written as to balance bottom 14,000. Now follow realization account. We have got assets which are realized and the payment of liability. So assets realized will be written as to realization account, assets realized 1,05,000. Payment of liability is written on the credit side as by realization account, liabilities paid, amount is 9,500. In the balance sheet, they have mentioned about Suresh loan. This loan has to be settled. So therefore, write it as by Suresh loan account. The payment is done through bank account to be written on the credit side. Now follow partners capital account. We have got the final payment to be done to the partners. Follow partners capital account. Write it as by Harish capital account 66,250 by Suresh capital account, it is 33,250. So that's it with bank account. Let's do the balancing. It has to be equal on both the sides. So on the debit side, if you add, the total is going to be 1,19,000. Likewise, if you add on the credit side, the total is going to be 1,19,000. So that's it with the solution, students. Thank you.